Hello, this is Dave at AFX Search Licensed Investigators. So your company have people on the road, people are doing business development, and they have expenses. How do you verify the expenses for reimbursement or if they're hitting your financial statement directly? There's a lot of ways a employee or vendor can do fake invoicing, even fake emails to show that expenses took place that they didn't, or to show that expenses that did take place actually were for business rather than for personal use. So typically, an expense verification project will go something like this. We look at the invoices, look at the emails, make sure they match up. We're going to cross-reference different records to make sure that the invoice has the same invoice number, same date, same description as emails or other records. We're going to use what's called Benford's Law, which is an analysis of numbers on a document. Any document that has a set of numbers on it will have a certain pattern to how frequent each digit appears. You would think that there would be the same number of 1s and 2s and 3s and 4s on any standard group of numbers, but that's not the case. There's a different variation of the frequency of numbers appearing. So we run Benford's laws on a analysis on an invoice. We'll know right away if there's any red flags that it might not be a real invoice and somebody just made up the numbers. We're going to compare that invoice with standard invoicing software. When people will change an invoice, it'll change the formatting, it'll change the way the digits appear when standard invoicing software is used, and there's only a handful of standard invoicing software used even by major companies. Hilton Hotels, all the major companies use a certain format and it will show up differently. We're going to compare the invoice with the known vendor format. If we know a particular vendor has a certain format, we're going to compare it. We're going to compare the invoice numbers, dates. Sometimes we'll know that a certain invoice number will be in a certain series for a date, and if somebody just throws numbers together or they take an old invoice and change the dates, we'll know because things won't match up. We're going to confirm with the vendor. The vendor will know what that invoice is. We're going to find out how it was paid. Was it paid cash or credit card? Because that's a way of getting double payments and double billing by changing the how paid format of that invoice. Who the expenses were for. Was it for personal use? And also the circumstances around that. What charges are included? What charges weren't included to make sure it matches up. Somebody didn't take off charges off an invoice that might have been personal expenses. If you have an invoice from a hotel, it's $88. If you find out that $20 was for an expense, let's say parking, which was legitimate, but $68 was for purchasing at the gift shop, that might be something you might want to know about, and that can be easily whited out. Why is it important to verify expenses even if it's a small amount? Look, an employee or staff or vendor will start out stealing $100 or small amounts first, and then they'll accelerate and increase to greater theft and fraud and embezzlement. Once they know they can steal and they've crossed that barrier, it'll happen more frequently, be larger amounts, and then it'll end up being bigger things once the employee knows that you're not watching. So expense verification is an inexpensive way to make sure that your financial statement stays healthy and your employees know not to cross the line.